Is Confluent stock a buy, sell, or a hold? I'm going to answer that question in this video looking at the company's revenue, cash flow, profits, and valuation. So let's jump right in, starting with revenue. Looking at its trailing 12-month revenue, you can see excellent growth here from Confluent. That's more than tripled its revenue from around 200 million in January of 2021 up to 683 million in the most recent year. The data streaming company is having great forecasts ahead and great prospects of revenue growth in the future. However, the question remains, can it do so profitably? So that's what I want to look at next. And looking at its operating profit margin, we can see the company is losing a lot of money on the bottom line, negative 71% operating profit margin. However, the good thing is that it is making significant progress towards profitability. I don't mind when growth stocks are losing money on the bottom line so long as they're making progress towards profitability, and Confluent is certainly doing that, from an operating profit margin around negative 98% up to negative 71% in the last 3 years. So moving in the right direction, although there is a long way to go. The next thing I wanted to look at is the cash flow from operations, and looking at this metric, Confluent is moving in the wrong direction. I'm looking at cash flow from operations, the raw number, not the percentage number, and the company's generated negative 175 million in cash flow from operations. That's down from around negative 80 million around January of 2021. Of course, outflows of cash are even more important nowadays that interest rates and cost of capital has increased meaningfully in the last year and a half. For that reason, I place a greater importance on cash flow from operations than I have in the past because of that higher cost of capital. Those losses, it costs more to retain the capital to incur those losses on the bottom line. Finally, I wanted to look at valuation, and looking at its forward price to sales ratio of 9.868. This stock is not cheap. In fact, it's relatively expensive. There are stocks trading at a lower price to earnings ratio than Confluent's price to sales ratio, although those companies are not growing revenue as quickly as Confluent is, and maybe they don't have the same growth prospects that Confluent does. Nevertheless, investors are paying a premium for a company that has those excellent prospects. So maybe these prospects are already incorporated in this valuation. Nevertheless, if I was to answer whether Confluent stock is a buy, hold, or a sell right now, I would say the stock is a hold. Its excellent growth prospects are balanced out by its losses on the bottom line and the relatively expensive valuation.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.